Welcome back. You're still watching Markets Today on CNBC TV 18. Let's go to the rest of the headlines that we're tracking for you. A big headline globally was that oil prices fell after a weak demand outlook for China, a healthy stock position in Europe and slowing US growth. The fall in oil prices saw stocks like ONGC and Oil India fall between 4 and 2%. Manisha Gupta is here with the details. Manisha.
Well, yes, it has been a week bearish. Crude oil prices down 10% in the previous week and down 3% week prior to that. So we are trading at a 2-month lows right now. And in the last 1 month as well, the crude prices have turned negative by nearly 6%. It has to do with the strength in US dollar, weak China demand. China actually has told Saudi Arabia to load lesser volumes to China by nearly 40 to 50%. And that tells you that the demand is weak in China. Europe as well has stocked up enough crude and natural gas preparing for the winter months. So that concern also has eased off. And it's not just about China and Europe. The US manufacturing activity, the lowest since 2011, also is weighing on crude oil prices. What the markets are now watching out for is the OPEC and allies meeting on 4th of December and the expectation that the European Union and G7 will put a price cap on Europe oil on 5th of December. So those two dates are going to be quite important ahead of the 14 December US Fed meeting. So crude prices can continue to be slightly more bearish from here on.
Okay, Manisha, thanks for that. Well, the fifth headline today, Hindustan Unilever gained in trade on the back of positive commentary from the company's first analyst meet that took place in the last 3 years. This was the first physical analyst meet that HUL had. Mangalam Malu joins in with the key takeaways. Mangalam, over to you.
Well, HUL did well in today's trading session, and that's after the company held its first analyst day in the last 3 years. And it did speak more of the same and also outline the growth strategy that the company has. The biggest takeaways were the fact that they're leaders in over 85% of the categories that they operate in. At the same time, they've reached almost 9 million stores. 25% of their demand is generated digitally. At the same time, 33% of their products are premium in nature in terms of their sales. The company has developed a lot of markets as well as marketing development cells, which now contribute to over 10,000 crores of their revenue, and they have over 16 plus brands which are over 1,000 crores in terms of sales. Importantly, a lot of their verticals are doing extremely well, namely hair care. We have the health food drinks, which has increased in penetration as well as physical reach. And we've seen some growth come by in the liquid wash, ultra premium liquid wash category as well. Brokerages were happy with that. We had Jefferies say that, it is an execution powerhouse, and they expect some gross margin improvement going forward as well. They have a target price upwards of 3,000 on the stock. We did see Phillip Capital as well maintain their high conviction buy on the stock with a target price upwards of 3,200 odd rupees, whereas ICICI Direct says that premiumization is the name of the game. They too have a target price of 2,800 on this stock.
All right, thanks a lot, Mangalam, for that. But Zomato was the other stock that we want to talk to you about. It fell by over 4% after the resignation of its co-founder Mohit Gupta. In fact, the company has seen a slew of exits recently. What's happening here?
There have been 3 large exits in the last 1 month itself, and the latest one came on Friday, where the co-founder Mohit Gupta has announced his departure. The recent exits include the likes of Rahul Ganju, who's the head of new initiatives. We had Siddharth Jhawar as well, who's the head of Intercity Legends, resigning just a few weeks ago. On the same, we had Jefferies right on this. They said that going by the release, it does not appear that they are actually looking for a successor to Mohit Gupta. And in their interactions, they found that Deepinder Goyal himself was in control of the business. So they do not see any big disruption in or major change in the strategy of the company. And with these departures, now it is clear Zomato's leadership is 3-pronged right now. Deepinder Goyal will lead their food delivery business and oversee the other 2 businesses. The other 2 businesses being Blinkit, which is headed by Albinder Dinsa, as well as Hyperpure, which is currently led by Rakesh Ranjan. So no real problems. They are positive on the stock, but in the near term, they believe it would be range bound, primarily because the company traverses through the growth versus profitability path going forward. So they will revise their call only after the 3rd quarter numbers.
Okay, thanks a lot for that. Well, the other stock that moved today was Escorts Kubota. It ended the day over 7% higher after the company released its midterm business plan guidance. In fact, 8.5% by the end of trade. And now the company is very optimistic. They expect revenues to more than double by FY28 over FY22. They also talk about how the EBITDA margins will improve to mid-teens versus 10.8% in FY22. And they're looking to grow their market share both in the export as well as in the domestic business. Remember, in the domestic business, they have a little over 10% market share, and they're looking to grow that in a big way. Now, how do they plan to do this? They are going to increase their production. So their capacity is going to be expanded from 170,000 currently to all the way to 300,000, and they're putting in a big chunk of money for this capex plan. They have about 4,000 crores outlined for this. So that's a massive plan that they have, but most brokerages believe that a lot of it could be in the price because the stock has rallied significantly. JP Morgan maintains an underweight. They say that yes, this is positive news, but the stock is also pricing that in. It's trading at over 25 times FY24, so pricing in both the good news and the strong growth. But the other stock in focus today was IEX. It was up by over 4% in trade after news that the company is considering a buyback, and there's a board meeting on the 25th of November to decide that. Vivek, my colleague, is here with the details. Vivek, over to you.
Well, that's right. So when you're talking about IEX, after quite a while, you're actually seeing that the management has decided to opt for a buyback. Just delving a little deeper into what exactly the company has as far as its resources are concerned, the total cash on the books is close to 1,000 crores. This includes the investment in mutual funds plus the cash component, and estimated free cash is in the range of 500 crores. Now, this particular stock in the last year has been quite a bit of a big underperformer. The stock is down almost 44%, and the stock is just trading marginally higher when you're looking at its 52-week low of close to 134 rupees. Now, looking at the stock and the reasons for its underperformance, one of the main reasons why the valuation multiples have derated has been the fact that the company that earlier enjoyed a near monopolistic status as far as power exchange, near-term power trading exchange market in India was concerned, has seen the onset of two newcomers, two competing exchanges, and this has led to valuation multiples getting derated. Also, the company also has said that the trailing volume has seen a bit of softness on the back of price cap that was introduced as far as the power market itself was concerned. So sellers too have stayed away. But going forward, analysts have highlighted that there are a couple of incremental opportunities that can be significant triggers. The first one is the introduction of long duration contracts, and the second is the introduction and the operational efficiencies that analysts expect to see from the Indian gas exchange, in which IEX has a significant stake.
Okay, with that, it's a wrap on this edition of Markets Today. Thanks a lot for watching. Have a great evening.